Well, let's get more reaction on the Fed with Jefferies chief market strategist and CNBC contributor David Zervos. David, it's great to have you on. It's interesting because you were on CNBC earlier today as we were getting reports that Trump was drafting this letter and planning to potentially do this. And then right after that, hearing from the president himself that it's unlikely, and, I sort of leave that with a little bit of a question mark and air quotes, that he's going to remove the Fed chair before his term is up. I want to get your reaction now as we've seen all of this play out in real time in the markets over the last couple hours.
Well, Morgan, I think, yes, you got me at a very specific time during this whole saga today. And it was, in retrospect, I think it was kind of, as I said earlier in the CNBC interview around 10:30, 11 o'clock New York time, that really the story here is the lack of market reaction, that the market was not particularly fussed by the fact that Jay Powell may be fired for cause. And that seems like what the president was talking about, not for interest rates. Then we kind of have learned, I think, as Steve said, that's a pretty big hill to climb with the building, and whether this building really is something that could be the cause of Jay's demise. It's a hard one to figure out. We're not experts in all that. But I would say that the most interesting part of the day was just how little the market really cared, how irrelevant that might have been. And I chalked it up to the fact that I think there are a lot of good candidates that the president is looking to nominate here. And I think the market knows that. And I chalked it up as well to the fact that the market already knows that the Fed really is not as independent as many think, something that John was saying in the previous segment.
So in light of that, I want to get your reaction to what we've heard from a number of the big bank CEOs. Have a listen.
I think central bank independence, Fed independence is very important, and it's something we should fight to preserve.
The stability of this country is actually necessary and important to the whole world. And I think a stable Fed and independent Fed is key to that.
And we also heard from Jamie Dimon in that conference call for JP Morgan yesterday, where he basically warned about how playing around with the Fed can have adverse consequences as well. I know you just raised this question of how independent is the Fed really, but how do you also avoid this becoming an Arthur Burns 2.0 situation if you do have a next Fed chair who's seen as tightly aligned with the president and his policies?
I think what the next Fed chair will be is someone who probably does take a little bit more risk with inflation, much like Janet Yellen took some risks with inflation, tried to run the economy a little hotter, and actually it worked even better than many had thought, and nobody got too worried about it. Even Ben Bernanke ran the economy with a little bit more focus on inflation risks when he was doing QE1, QE2, QE3. So I think it's more about the risk taking that the Fed takes. And this Fed is skewed toward not doing that, I think, for some political reasons. And that's historically where Jay Powell was back in 2018, where he seemed to get to in September of last year when he decided to cut 50 instead of 25. And I think the president is, like he did in 2018, sort of rebelling against that whole structure. And again, by 2019, Powell was reversing those rate hikes as they created some problems in the economy. I think, Morgan, the big story, and I hear all your guests, I hear all these CEOs, I listen to a lot of very talented mainstream economists talk about the importance of Fed independence. The reality is, if you really look at the history of the Fed, it is part of the DC swamp. It is the creature from Jekyll Island, as the book says. It was created in Jekyll Island, and that is a swamp creature, and it is political. And we should just live with the fact that we have a political Fed. I'm okay with it. I use that all the time when I'm doing my analysis for our clients to try to best serve them in understanding the decisions the Fed makes. I'm not trying to say what it should be, but what it is.